What if the company you thought you had fully mapped, every metric, every catalyst, every risk factor, suddenly began moving in ways so abnormal and so strategically uncharacteristic that it felt less like a business and more like a puzzle? What if the stock's behavior began contradicting the fundamentals, the disclosures began contradicting the company's history, and the capital structure began contradicting everything you thought you understood about how firms of this size behave? That kind of rupture does not happen often, but in 2025, Bitfarms forced investors into that exact psychological space. Bitfarms, founded in 2017 and long regarded as a conventional Bitcoin miner operating across Canada, the United States, Paraguay, and Argentina, had spent years playing a well-understood role. It mined Bitcoin, it scaled rigs when conditions were strong, it tightened operations when mining margins compressed. The business was volatile, yes, but predictable in its volatility. A traditional miner's life cycle revolves around ASIC upgrades, energy cost optimization, and hash rate growth. That is the standard operating logic of the sector. Beginning in 2024, Bitfarms started violating those expectations, not with small deviations, but with seismic, pattern-breaking decisions that suggested an internal transformation so aggressive that it almost seemed implausible. The 2024 financials were the first hint. Roughly $193 million in revenue, up more than 30% year over year, and losses narrowing to around $54 million, nearly a 50% improvement. A miner in that position would normally double down on mining, deploy capital into newer generation ASICs, and expand site output ahead of upcoming Bitcoin halving cycles. That is the industry norm. Bitfarms did the opposite. Instead of reinvesting in mining infrastructure, it began exploring a complete structural repurposing of its assets. In early 2025, it enlisted Appleby Strategy Group and Worldwide Technology, firms usually hired by hyperscale data center developers, not miners, to evaluate converting portions of its 1.2 gigawatt North American energy footprint into high-density AI and HPC campuses. Miners do not behave like this. They expand or contract fleets. They do not redesign their power infrastructure around an entirely new industry. When a firm breaks sharply from sector patterns, it often means its internal strategy has already evolved far beyond what the public realizes. Soon after, Bitfarms exited its Argentina mining operations. Under ordinary mining economics, foreign sites are sold during liquidity distress or when energy costs blow past break-even thresholds. Yet Bitfarms' liquidity was rising, not falling. Selling into strength is not how miners usually behave.